And so I began to look into market play. I began to look into how can one make this their profession? And I stumbled across the idea and the reality of traders. When I discovered that there were people who, like this gentleman who gave my dad that advice, went to Wall Street every single day, and they actually traded the financial markets for a living, there began, at that particular point, there began no question in my mind that this was the thing I wanted to do. I wanted to become a trader from that point, that realization, more than anything else in life. And at the same time this was happening, I became interested in girls. So two things moved me away from piano playing. Girls, practice 8 hours a day or hang out with some of the nice looking girls in the neighborhood. The girls won. And on top of that, my interest changed. I no longer really had this really big desire to be a professional pianist anymore. I found what I wanted to do. I wanted to be a professional trader. And so at the time, at 16 years old, I did not have any money to do this, of course, so I convinced most of my family members to help me. Many of my family members remembered what happened to my father years ago, and so they were very fascinated. And so we put together a family investment club, and each member of my family deposited into this club every single week of the month and every single month of the year. And I proceeded to actually take the money and invest it into the market, to trade it into the financial markets. And I'm sure that most of you understand what's going to come next. I proceeded to lose my family's money every single week of our existence. Every single deposit we got, every single deposit I received, every single week, I made choices in the market, and I basically lost. My family continued to support me month after month and year after year, despite the losses, despite the blows, despite really having no evidence that this was going to work. I believe that what they were hanging on was the hope that one big lucky event, like the lucky event that happened to my father, would ultimately happen. But that lucky event never came. And so from the age of 16 to about the age of 21 or so, I was dedicated, of course going to school, but dedicated to the financial markets. I primarily stopped playing the piano and attempting to try to learn how to do this correctly was my number one passion in life. I did not want to go to university. I did not want to go to school. My parents were very disappointed about that, so I realized I had to go to school just to please them. I chose accounting as my major because it was the closest thing to me that was to trading. So at least I was studying something that dealt with corporations and publicly traded companies and treasury stock and things of that nature. I felt that accounting would give me the ability to crack a company open and learn what makes it tick, how it makes its money, and so forth and so on. So that was the closest subject to me to trading, so I majored in accounting. Not because I wanted to be an accountant, only because that was the topic closest to the markets as far as I'm concerned. And to sort of make a long story short, I went through a period during which, first of all, there was no help. You see, back in the early 1980s to mid-1980s, there were no seminars. People did not give seminars on trading. There was no internet for research of any kind. There were a handful of very old books, Edwards and McGee, Technical Analysis of the Stock Market by Edwards and McGee. I remember reading a book written by Nicholas Darvis called How I Made $2 Million in the Stock Market. Of course, one of my favorite books of all time at the time was Reminiscences of a Stock Operator, which is a book to this very day I recommend traders read at least once a year until you die. It is that important, and it had that much of a huge impact on me. All right? And give me a second, guys. So there were no seminars. There were no. There were these small handful of books. Yes, there were these small handful of books, and you know, there were no expositions, there were no magazines that helped the individual trader. The market at the time was institutional, and the only way to really get into an educational or learning program was to be hired by one of the major Wall Street firms. And in order to do that, you really needed an Ivy League education. You needed to have connections. You needed to have a way inside, and it was very difficult at the time. So the only method I had available to me was to take money that I did not have, money that my family would deposit into our family investment account every single week. And I went through a trial and error period. I literally, through some of the reading of some of these books, just put a list of things together. When this moving average crosses that moving average, I'm going to buy. And that would be, for instance, like item number 1 on my list, a moving average crossover method. And I would experiment with this one thing, but here's how I experiment. When I lost my entire account on item number 1, I crossed it off my list. I knew that if something could lose my entire account, it had no efficacy, it had no validity whatsoever. And then I would do whatever I needed to build the account up, some deposits from my family, and at a certain period of time, I had enough accounting credits to get a position at a temporary agency to place accountants temporarily at certain corporations, all right, for short periods of time. So I got brought on by a temporary agency, and I told them, I said, listen, I'm open for temporary jobs, but I don't want any jobs more than 4 to 6 weeks, preferably 4 weeks. And my goal was just to earn a paycheck to put it into my trading account, along with the weekly deposit from my family, so that I would have enough money to try item number 2. And so I'd take a temporary accounting job, work 4 weeks, maybe 6 weeks, grab a check, pay a bill, buy groceries, put the rest of my trading account, and then I was on to item number 2. And I would trade item number 2 on my list. All right, when the MACD gets oversold and moves above this particular line, or there's a bullish divergence on the MACD, I'm going to buy. And I would try the MACD bullish divergence buy method. And when I lost every single dollar that I owned or had available to me on that item, I crossed item number 2 on my list. And I want you to understand that this went on for years. That week after week and month after month, I literally saw no evidence that I could ever do this, that I would ever do this successfully. That week after week, I blew the account month after month. I just lost on things that were written about, things that were maybe discussed in some Wall Street article, or briefly discussed on an episode of Lou Rukeyser by some so-called expert hedge fund manager who was being interviewed by Lou Rukeyser. Anything that I could find that someone said worked as a system, as an approach, anything I read in a book or heard from someone else, I tried, and I tried it with real money. And my method was the trial and error method. And the only way I knew that something just had no hope was if I tried it small enough and tried it frequently enough, but frequently enough, that frequency lost my entire account, it would get crossed off my list. And so in a way, I learned what works in the market as a trader through the process of negation. I discovered first what did not work. I discovered first what did not have validity. I discovered first what did not seem to even have a small iota of a chance of being successful. If something caused me to lose my account over a longer period of time, then I would give it a second shot, even though I lost my account on it. But I would say, but I lost my account much slower with this than anything else I've ever tried, and I'd give it a second shot, and sometimes the second shot lost it fast. Sometimes the second shot did well, and I would keep it for a third set. And on this went. Day after day, week after week, month after month.